Hey everybody, welcome to the Thursday. Oh, wait, no, Friday. Today we are on a Friday. The Friday evening financial thing YouTube live stream where we cover all things peer-to-peer lending and general investing. Whatever we decide we want to talk about, we cover. Yesterday was a big holiday here in the United States of America, being Thanksgiving, something to do with pilgrims. My American history is really shitty, so excuse my language. I have to bleep that out. But so hence the stream was moved to Friday this week. So thanks to everybody who is joining us. Just a quick disclaimer that this video is awesome, but it's for informational purposes only. This content is not financial advice and has been prepared without taking your objectives, financial situations, or needs into account. You should consider its appropriateness for your circumstances. All investing carries risks, and opinions expressed in this video review are opinions based on my own personal experiences. The FSCS does not cover peer-to-peer lending or most other investments. Your capital is at risk. Please don't invest more than you can afford to lose. So, hi everybody. I got the very festive it's not really a Christmas shirt, but it's the closest thing I have coming up to Christmas with the, looks like more fun than a Christmas tree, but trying to get in the festive spirits this year. But if you can, go ahead and hit that thumbs up button. It helps out with the YouTube search algorithm. Appreciate that. We're going to run through quite a bit of information tonight. It's been kind of another quiet week on the peer-to-peer lending front, but we are going to cover some things that I think we have to cover this week, one of them being the Lendingworks negative interest rate, which essentially is just a fee. I did have a phone conversation with one of the Lendingworks reps today. I just wanted to find out what the hell was going on over there and what we can expect to go forward. So I'm going to talk about that and what my personal feelings are about the Lendingworks situation. 2020 has really been the year of sort of the ups and downs of investing, right? And the Lendingworks situation, I personally don't think maybe is as bad as other people view it, but I'll kind of discuss my thoughts on that. You can chime in too. Let me know what you think. If you're a Lendingworks investor, I'm sure you're a little bit concerned about that. And we're going to cover a little bit of funding circle news. What else? All quiet on the rate sets. We'll do our weekly Loanpad update. I'm going to cover some Mentos information tonight. A little bit of Assetz capital. Some Zopa news. Lendinvest news. Some funding secure updates on a couple of the recovered, or one of the recovered loans. Some funding circle. And what else? Yeah, a couple of other things on the list here. A new platform that's announcing it will be launching next year. So let's get to it. As always, we're going to say hi to everybody in the stream. So be sure to put in your comments where you are chatting from this evening, over in the UK or wherever you are in the world. Let me just silence the old phone. And then we'll get started. So, hi, Peter in a rather chilly Leatherhead. Patty, I can really never get your name right, so I'm just going to call you Patty G. Patty G is in where? Where are you, Patty? You got to put it in there. Mike Powell from Tier 2, Southampton. Yeah, is this the way that we're going to be recognized now, is on this level of tier? It's like what division football club are you in? And now we're in this division of tiers. If you're in the Tier 1, I think you're in better spot than Tier 3, right? So Tier 2, Southampton. Nice to see you here, Mike Powell. David Dawson, Double D, is here from Staffordshire. Nice to see you. Welcome. Thanks for joining us. Aki Chap, of course, from cold Tier 3 in Accrington. Nice to see you as always, Mr. Aki Chap. And Albert Adams from a cold Hagley. I have to remind, I have no idea where Hagley is. I'll probably have to Google that one. Sounds like a small place, if I'm guessing, maybe out in the countryside. So, Albert, nice to see you. Welcome to the stream. Stephen in Southport, not Stockport, very different places. Southport. Hi, Norman, in what was a very sunny Sussex, and now I'm presuming is very not sunny. And Brian, of course, from Woburn is here. I remember that. John from where are you, John? You said anyone else started on the stolen. I don't know what that means. The stolen. I know what Stolies is. You talking about a drink? Happy Thanksgiving. Thank you, Akichap. Thank you. Now, technically, not me being a real American, I don't know if I could take credit, but being in the country for Thanksgiving is always nice. Hi, Paul. Back in West Palm Beach, Florida. Nice to see you, Paul. I'm sure you got to experience maybe a little bit of the American Thanksgiving. You know, turkey. They do the cranberry sauce, the ham. They've got some dishes over here which I really am not a big fan of. They make this sweet potato casserole, and it has this marshmallow stuff on top. It's so sweet. It's more like a dessert, but they call it a side. But yeah, they got some interesting dishes. Green bean casserole, but generally mashed potatoes, always a hit. And a guy from the UK here made some roasties too. That was nice. Yeah, who else we got here? Tony from Somerset, Arthur Ackerson from I forget where you are, maybe Ireland, if I get that right. It's not actually technically a New Zealand shirt, but it's very, very close. Hi, Jackie, Honor. Nice to see you. Great last name, by the way. What an honor to have a last name of Honor. I mean, can't get better than that. Thank you for the Thanksgiving wishes. See, David Halls from Stowmarket. Patty's in France. Oh, I forgot. Okay. Patty is in France. I have to remember that. Hi, Wayne from Dark Cold Kent. Martin in Leeds, of course. Tears for Fears with I like what you did there with the TIERS. Shout, let it all out. These are the things that something's going on about. Hello, Chica Boy in Folkestone. Up to no good, I'm sure, over there. Hope you're well. And see if there's anybody else. Okay, Hagley's just south of Birmingham. It's got family in Birmingham, up in Moseley. So know it well. Thumbs up for the bull rink. So yeah, that's it. If anybody else in the stream wants to hi, just pop your name and where you're from in the chat, and we'll give you a salute. We'll give you a 3-tier salute. I don't know if that's good or not, but. And also don't forget, if you haven't joined the action groups, we've got the Funding Secure Action Group, as always, headed by Mr. Mark Mason. So that is right there. It's on Facebook if you want to join that. If you're an investor in Funding Secure and you want somebody who is trying to look out for your best interest, because it seems like the administrators are not, join that on Facebook. And then Mike Powell and the Lendy Action Group. The Lendy debacle still seems to be continuing. And get represented there on the Lendy Action Group. Find out what's going on. And then there's the, of course, Wellesley Action Group. Seems like we're going to have more action groups than anything else. If you want to join the Facebook Financial Thing Facebook group, we have a little thing right here. Look at that. Look at that nifty electronics going on. There we go. You can join the Financial Thing Facebook group. Yeah, so that's what's going on there. Let's get right into the information. We're going to try to end under an hour this week. Always say that, never happens, but never know. Lendingworks has Loanpad added a couple new loans this week, so we've seen the loan book pop up another 900,000 from 14.1 million. Last update last Thursday, up to 15 million pounds. Slowly increasing that loan book. Slow and steady wins the race. Average loan to value dropped a little bit, for 34%. 39 loans now instead of 37 last week. Still got one default and 2 loans being serviced by the interest coverage fund. So not much being changed on that. I don't really have too much information or updates on what's going on with those loans, but I'm presuming half handling those loans as needed. Hanf is obviously Loanpad's major borrower, even though Loanpad is bringing on some new borrowers now, starting to increase that loan book. Hanf, I think, will always be their staple borrower. They are the company that I went to visit, and I think they're very, very stable. Yes, I'm still very happy with Loanpad. You can still exit times are very low, less than 1 day. If you need access to your money, obviously never guaranteed. If you're new to peer-to-peer lending, you need to understand that liquidity within peer-to-peer lending is never ever guaranteed. There are some peer-to-peer lending companies that offers things like shares in properties where the liquidity may be a little bit better than some other places, but you're going to see a lot of peer-to-peer companies that have very little to no liquidity at the moment. But Loanpad is one of those companies that still continues to offer liquidity, and you are getting a pretty okay interest on your money. Things are not great interest rates over any investment at the moment. And if you're chasing interest returns, just be aware that you are probably going to be taking on some extra risk there, because if you look at savings rates now, things are being cut. In fact, this week we had Marcus Bank cut from 0.75% down to 0.5%. So pretty negligible interest rates on bank savings. If you want interest and you want to take the risk, you can do it. In peer-to-peer lending, you can find it. You just got to make sure you invest through the companies that are, we say, good right now. Even though we don't know full on what's going to happen in the future, there are definitely some companies out there that are doing the right things. I think Loanpad is one of them. So let's talk about the ugly elephant in the room this week, which is Lendingworks. And by the way, if you have questions or comments, just pop them in the chat. I'll go through them towards the end, unless I see something pertinent that pops up in the chat while I'm going through this information. I do try to keep an eye on it, but sometimes I can't read the comments and formulate my thoughts because I have a very simple brain that seems to only operate on one side. So let's talk about Lendingworks. Obviously, we've seen these negative interest rates, which essentially, as other people have commented, are just really fees and also ways for them to build up their shield fund. Obviously, the loan book they've estimated is going to have a much higher default rate than they originally thought, which, it seems like, to me, that seemed like common sense. You got all these unsecured lenders that, what's going on with COVID is very obvious to me. We are just seeing the tip of the iceberg of what's going on with the financial world. There's going to be more defaults. There's going to be more people that fall into financial troubles because of COVID. And some of these companies are going to have higher default rates. So depending on how the companies in the peer-to-peer world have set themselves up, will be dependent on what we are going to receive as investors and whether those companies survive or not. So I was checking my own account this week, and I've read things from different people about the amounts of money that that have been disappearing out of their accounts through this negative interest rate situation. So I wanted to look at my own account and see. I don't always believe everything I read on the interwebs, and I found that through November, I think it was November 1st to today, 0.4% of my account had been subtracted out to go to the Shield Fund. And last time I had an interest payment was in May of 2020. So on the surface, things don't look really good, right? If you're an investor, you're thinking, well, hell, I'm not receiving any interest payments, and now you're taking money out of my account. Yeah. So I decided to give Lendingworks a call. I was like, I want to hear what's going on from the horse's mouth. And obviously I take things with a grain of salt when representatives tell me these things, but I can only believe what they tell me. Whether it's the truth or not remains to be seen. So what they said is, number one, they have a new dashboard coming out they said the next few days, so I don't know, hopefully by next week we'll have a new dashboard, and that will show very clearly and transparently the impact of the negative interest rate reductions on our accounts as lenders. I think that's been one of the biggest gripes, at least for me, is the lack of information about how this negative interest rate is being calculated. Does the company have the right just to say, oh, well, we're doing really badly this month, so let's deduct 0.10% of your account out to contribute to the Shield Fund? Where does it end, right? And I believe in their terms and conditions they have rights to do this. But what they said is a new dashboard will come out in the next week to show the impact of the negative interest rates on our accounts as lenders, and it will also be shown on the new statements, which is good. I really want to see some transparency. I really want to know what the hell is going on. How much are you going to take out of my account? I don't want any surprises. But what they also said to me is the first 3 months are going to be the hardest 3 months on your account. But they estimate it to be about 2% annually in the negative. So when I saw the 0.4% had come out in November, I was thinking, well, 12 months, that's close to 5% negative. But the rep Alex told me, no, it's estimated to be at 2% for annual. Obviously, the longer you've been in Lendingworks as an investor, the less impact this is going to have on you. If you just started investing in 2019, you're going to see a far more direct impact on your account than you would from somebody like me that's been investing since 2015, because obviously I've had those years of interest payments and now I'm starting to see the negative come in. If it is 2% a year, it's not going to be the end of the world. But the question is, how long does this really go on for? Is it indefinitely? Who knows? I don't think they know. They're saying to me that it's going to be reviewed every quarter. And obviously it's a shite situation. I mean, it's not anything that anybody wants to hear. And of course, investors are going to be upset about it. And now I'm being charged money to invest through you. But at the end of the day, it's an investment. You have to understand that when you invest through a company, things happen, and COVID has happened, and COVID has impacted these businesses in ways that nobody could imagine. And that's just part of the risk. You want to get 5, 6, 7, 8% on your money. You are going to have to take a risk. And there are some times where the risk just doesn't work out. And we've seen it. I've seen it in shares. I've invested in shares that have gone bankrupt in the past. And I understood that. I understand that when I invest in something, there is a good chance that even though they tell me, oh, you're estimated to receive this amount of returns during this period, there's a good chance that I won't. And I understand that. So now this is why I diversify very greatly across lots of different platforms and investments. If I take a hit from one of these companies, it's not going to put a massive dent on my portfolio. I highly recommend you do the same. Thank God that I did that through Lendy and actually at one point I had quite a heavy investment in Lendingworks, but I started to really water that down in the beginning of 2019, and that just kind of worked out well. But what else did they say? They said that the FCA forced them to give a 6-month payment holiday to their borrowers. So there was that had a negative impact on the fees that they charge, and also not being able to write new business. Now, I don't know what the whole deal with the freezing of I should have asked her about that. I completely forgot. Why have you not written new business? But see, when a peer-to-peer company doesn't write new loans, now they are not generating origination fees from the loans that they write, which means their income goes straight off the cliff. And this is what's happened with Lendingworks. I don't know if it was something to do with the Intriva Capital takeover, but another thing that the rep did tell me is that Intriva is well capitalized Lendingworks, and they are very bright thinking over the future. If I had to take a guess, I'm thinking that these negative interest rates are going to last for 6 months to a year. If you look at Trustpilot, Lendingworks has taken a real beating. I mean, obviously investors are not happy, and they have let those feelings be known on Trustpilot, and that may really damage Lendingworks' investment intake in the future, because if you're an investor and you're reading all these negative comments, you're probably not going to want to continue to invest through Lendingworks. But hey, that's the way it is. When people invest, they don't always understand what they're investing in, and then they get their feelings hurt when things don't go their way, and then they turn to the internet. Trustpilot can really make or break a business nowadays, which Lendingworks has probably seen more phone calls than they care to about this situation. Am I concerned? At this point, I'm not particularly concerned. I think the injection of capital from Intriva will keep Lendingworks going in the right direction. I think we'll continue to get paid capital back, even though it's not going to be what we should get back. And personally, I'm in a withdrawal phase at this time. Again, I don't see any point in continuing with Lendingworks at this point. If they open their doors in the future and things change, maybe, but not feeling particularly happy about this situation. But I know it is what it is. So let me know what your comments are, what you think about that. If you're a Lendingworks investor, that's going to go on for a while. One of the other companies that I think is starting to fall off my happiness radar is Mentos. If you're a UK investor, you can't invest through Mentos anyways, but I always had a pretty good view of them, but I've started to really pay attention to the companies that are loaning money through Mentos, and I see this sort of deterioration of what's going on. I think in Europe, borrowers are going to get hit hard, and I think a lot of defaults are going to come. So I think Mentos probably did the UK investors a favor by kicking them out. And they recently did a big crowdfund raise of they were trying to get €1 million, and they got €7 million on Crowdcube, which incidentally, Crowdcube now has just become a stock trading platform. I don't believe that people really invest in these companies to invest in the companies. I think they're trying to do it to flip stocks and shares on there. So I don't know if that €7 million is a really glowing thumbs up for Mentos, if it's just investors flipping stocks on there. But I'm a bit concerned as to the quality of the lending companies. I've seen some companies just generally default, and they have these buyback guarantees too, which just goes to show that some of the companies that offer buyback guarantees have also defaulted, so which renders those buyback guarantees useless. Those buyback guarantees are only as good as the companies that are offering them. If those companies go out of business, those loans then become defaulted, whether they have buyback guarantees or not. So what is Mentos? I think, as COVID has gotten worse, I think Mentos is just having challenges keeping their loan book current. And I checked on their statistics page in November 2020, €87 million of loans are in recovery. Most of that is tied up in several suspended or defaulting lending companies. Out of a €500 million loan book, 74% of the loans are current. So 25% of the loans are past due or in default. Just a result, again, of COVID and what's going on. It's a bad economic situation out there. So Mentos is sort of on my watch radar at the moment. Assetz capital discount this morning was at 3.4%. If you're looking to exit out of your QAA account, those rates continue to stay pretty decent from where they were, a couple of months ago, in the 8, 9, 10%, still at 3.4%. I'm getting about 3.6% of interest there a year, which is half of what I've been getting for a long time. But again, that's another result of COVID. No real other news there on Assetz at the moment. Kuflink has repaid £15 million of capital between April and October, so they continue to move forward. I had a chat with the Kuflink rep this week, and he's very positive about Kuflink and where they're going and the direction they're going. Obviously, COVID has created some issues. They're property lending, bridging lending type companies, so there's obviously some challenges out there in the building world with the social distancing, and the quarantining, but they still seem to be going ahead as normal. I've been happy so far. Again, I still diversify no matter how happy I am with Kuflink or Loanpad. I still have money spread out because nothing is 100% guaranteed. But the fact they've repaid £15 million of capital has been repaid between April and October is very, very positive in my book. And they're very close to hitting that £100 million of lending, which is a pretty big milestone in a peer-to-peer lending loan book, especially one that's not a huge company. Kuflink is not a massive operation compared to something like Funding Circle or RateSetter. So they are creeping up very close to £100 million lent, which is encouraging. This week we saw Zopa's cutting their savings rate. I knew that was coming. Those promotional rates were, whatever. They've cut savings rates from 1.15% down to 0.9% for a 2-year fixed and down to 0.5% for a 1-year fixed. Personally, I don't see any point in taking on rates like that because I think rates will eventually start to creep up, maybe within the next 6 months to a year. And why lock yourself into a 1 year? Honestly, you're better off taking out premium bonds at this point, which incidentally is something, I think I mentioned this last week. I was really severely against premium bonds a couple of years ago because the returns are just, I think they're about 1.25%. But now I think premium bonds are probably one of the best places you could put your money in safe, liquid investments. I mean, you can get access to the cash and you're probably going to make 1% minimum. Maybe more, maybe you hit the £1 million jackpot. So I did a U-turn on the premium bonds and put my mother's money back into premium bonds. I was kind of grimacing when I did it. I don't want to do it, but you get that tax-free benefit too. So rates are just crap right now. As I said, Marcus has cut its rates. I don't know how much lower they can go. Maybe to 0.25%. We'll see. Lendinvest has got a new 5-year fixed rate product that offers 3.54%, 75% loan to value on the properties inside of that product. And then cut their 2-year 70% loan to value rate down to 3.19% and their 2-year 75% loan to value at 3.29%. I think obviously it's a no-brainer. Take the 70% loan to value. I don't think there's too much difference in either one, but for an extra 0.1%, why take that extra risk? It's not worth it. But again, locking in at 5 years for 3.5% is madness. Definitely wouldn't do it. But in return, Lendinvest has cut landlord borrowing rates down, so they're paying less money, which is a good thing for them. Obviously, when landlords are paying less on their loans, that's obviously a really good thing. Don't forget to hit that thumbs up if you can. Please subscribe to the channel. I think we got about 690 subscribers. My goal is to really push and try to get to 1,000 by the end of the year. I don't know if it's going to happen or not, but with your help, if you're not subscribed, please do that and hit the bell so you can be notified of when new videos are coming out. I will be doing, by the way, the Trading 212 update this week. I didn't do one last week. I think once every 2 weeks is enough on that. They're actually super time consuming to make. I didn't realize because I'm a bit of a perfectionist, but the portfolio has just gone absolutely bonkers. I mean, the stock market's on fire. If you've been invested in the right things, especially in the U.S. market, it's printing money right now. I don't know if that's going to continue, but the portfolio is doing really, really well. We've had a couple of real home runs in the form of Magnite and Tesla and Lloyd's Bank and Trade Desk. I think one of them's up 80%. Unfortunately, I didn't have too much in that, but Lloyd's Bank up about 50%. So we started in September, and Tesla was today, I think 77%. 37% up. So I'll do an update video this week on that. Funding Secure recovered loan this week. News on that. 25% capital loss to lenders. 44 grand into the pockets of Funding Secure. Thank you to the waterfall inside the terms and conditions. So they got a nice little payout on that. Every time I read that, it makes me feel slightly nauseous inside. But 25% capital loss is better than a 50% capital loss. I'm always trying to look on the bright side, and it's painful. If you had a lot of money in a loan like that, you're going to take a £250 loss on every 1,000 you had in. You could write it off on your taxes. I guess not tax advice, but if you need some tax relief, you're going to get some from Funding Secure and Lendy. Let's see, Funding Circle, they have originated £1.8 billion of CBILS loans, which is almost 25% of the whole entire market of CBILS lending. And they've announced that 90% of borrowers have resumed making payments. Now, why does that matter to you? If you're a Funding Circle investor, you're probably pretty pissed off at this point. You're trying to get your money out. Everything's running slow. Why it matters to you is because when Funding Circle originates £1.8 billion of CBILS loans, it means that revenue is going up and up and up, which means the hopefully business for them is good and they stay in business, and hopefully as an investor you can exit if you want to do that. That's why it makes a difference to you and why you probably want to care. If you're a peer-to-peer lender, you cannot invest in CBILS loans. But at this point, as far as I know, most of the people who email me want to get out of Funding Circle at this point. And they should take some comfort in the fact that the business is writing a ton of these CBILS loans and will continue to do so because the revenue generation. The shares are still in the pooper at, I think, 86p a share. Useless. Don't buy Funding Circle shares, in my opinion. Disclaimer, again, not financial advice, but not a share I would want to be in. I think there's many better share opportunities out there than that. What else? So Crowd Property, they think they're going to lend £400 million by 2024, so they seem to be really motoring forward. I know there was a lot of talk last week of one of the loans that they were introducing that had been on the Funding Secure platform. I personally did not invest in that loan just because I don't like the CALM or anything to do with Funding Secure. Lendy, collateral, or money thing, I just don't want anything to do with it. But Prop Lend, £100 million in lending, and pretty good milestone. And then Kuflink again close to the 100 mil mark. Had a little bit of news about Blackmore Bonds. Duff and Phelps is doing the administration on that. A really, really crap situation that people invested in these in these, whatever you want to call them, bonds, mini bonds, and are pretty much going to take a huge hit. They're now saying that out of £46 million that's owed to these investors, they're talking about a recovery of £1 million. They're saying this because of the available equities in these properties that are now in recovery has fallen, and due to the high levels of interest charged by third-party lenders and the delays in getting the properties to market, equity has fallen, prices have fallen. And also the contractor work in some of the properties has been really piss poor. So now, and if you were an investor in money thing, there was an incident of poor contracting work in one of those loans. So poor quality control, and that can really affect the price of these properties. If the property is not built properly and it has to be redone, then if that property is up for sale, no developer is going to pay a premium to buy a property like that. So these poor investors in Blackmore Bonds are really getting the shaft. Worst thing, and this was what really made me cringe, was the £1.22 million in legal fees that Duff and Phelps, the administrator, have managed to charge so far So that you're telling me that the investors are going to get back less than $1 million, but the administrator is making 1.22 mil so far. Yeah, don't even get me started about these administrator fees. It seems like there's no end, there's no cap. They could just charge whatever the hell they want, and sometimes there's a cap, sometimes there isn't. Seems like more often than not, no cap on the fees for the administrator. The investor gets the shaft. The administrator wins. Whoever knows whatever's going on in the background, deals are probably being done. Those people are winning, and the investors are getting just taken for one. Really pisses me off. But that's the problem with bonds. Be very careful if you're investing through private bonds or publicly listed bonds. Make sure you know what you're getting into, because the risks can be monumental. And as you've seen, with any investment, I was reading a story this week about the makers of Oxycontin, which is a highly addictive drug used for pain relief. Purdue, I think, is the name of the drug company. Has been hit with criminal charges, placed into bankruptcy. So just make sure you really understand what you're getting into when you invest in companies, and diversify. We have a new company that's supposed to be launching next year called PropT, which is shares in buy-to-lets from landlord listings. And they list on their website safer than stocks. And I don't know these guys. I've had a couple of messages on LinkedIn. I really hate to see that type of advertising, because I think it's very misleading. Safer than what stocks? I mean, is it safer than an index tracker? No, I don't think so. Is it safer than a bond tracker? How could it be? But yeah, there's a lot of misleading stuff I think that needs to be addressed when it comes to advertising these peer-to-peer investments, especially for people that are not experienced. And they may look at that and think, oh, safer than stocks, it's regulated by the FCA, I'm good to go, I can put money in. But no, it's not always like that. But I'll probably have more information on that company in the upcoming weeks. I tend to try to look at the new companies, don't always. But I like their name, PropT. It's like PROPTEE. Get it? PropT? Property? But not an endorsement by any means. I don't know them. I don't know anything about the company. But somebody that's going to be launching in 2021. What I pay close attention to when these companies launch is who is behind them. Do the founders have any experience in property lending, or are they tech people? If they're just tech people, then that doesn't mean they know what they're doing when it comes to anything to do with property. We've seen that in the past, so keep an eye on that. Annual house prices rose to 5.8% for the year in October, which is crazy. I mean, we're having like this unprecedented world economic problem, and house prices continue to move forward. I never would have guessed that. If you'd have told me back in March, I would have told you the stock market would be in the dumps right now, which is not. I don't know what the Dow is today. I haven't checked, but 29,910 points on the Dow. The FTSE up to almost 6370. I mean, I'm confused. I'm really confused. I think that I feel in my heart of hearts that something is not quite right. I think it has a lot to do with the government's propping up the economies. But if you look at what's going on economically, there is a lot of problems, but there's also a lot of government money out there sort of band-aiding and putting a plaster over the problems. Bitcoin last week hit a high for our period of 19,000 US dollars and then dropped back down to about 16. I think it's up a little bit today. By the way, if you don't have any Bitcoin, I highly suggest just getting yourself informed on it. A lot of people say, I'll never invest in it. I don't understand it. It's just, there's no value to it. But great video on YouTube. Just Google $10 million Bitcoin. Get yourself educated on macroeconomics and understand that there is a lot of potential in Bitcoin. I'm not one of these people who's going to invest too much cash in it, but I think having some Bitcoin for the future, the next 5 to 10 years, probably going to work out really well. We'll see if I'm right or wrong. Maybe it'll go to zero. There's never any guarantee in that. And let's go ahead and look at the comments this week. See if you have any questions, anything interesting, any good jokes, any mince pie jokes. Yeah, Mike, I've turned into a Kiwi. I've never actually been to New Zealand. I want to, but I like the Kiwi reference to the shirt. Again, thank you for the Thanksgiving wishes. And let's see. Jackie says, most interested in rate setters' adverse interest as they are taking monies from my account that doesn't have any interest cents on the withdrawal from the holding pot. Jackie, are you thinking about Lendingworks? Is that right? I think you're talking about Lendingworks. Yeah. Chica Boy says he's always up to no good. That doesn't surprise me. Thanks for the thumbs up. Paul said, am I still happy with Loanpad? Yep, just kind of mentioned that. Absolutely happy with them at the moment. No issues there. Nothing on my radar that's telling me otherwise. Yeah, Patty also mentioning about rate sets as negative. I think Jackie means Lendingworks. Hacky Chap says, no issues with Loanpad. I like getting my daily pennies. Absolutely agree. It's nice to see daily interest. The only company out there that's doing that as far as I know right now. Hi, Craig from Ayrshire, center of the universe. That's a pretty cool place to be. John added an ISA top up today to Loanpad. Chica's been with him for a while. Seems like Loanpad is getting good reviews so far. Jackie says, interested in Zopa's removal of their safeguard, which they promised to honor until the end of loans back in 2017. Till they matured in 2022, but now decided to withdraw on their promise. Yeah, this is the thing about terms and conditions of these peer-to-peer companies. They can pretty much just go back on things or change things whenever they want. It's just something you're going to have to expect. Again, I think Zopa will eventually get rid of their peer-to-peer lending business completely. So, yes. Hi, Andreas Ware. Nice to see you. Hey ho, thanks for joining us tonight. Welcome to the stream. I know these comments were a bit delayed, so I might have covered some of this. Lendingworks, David said, has deducted 25% of my capital returns to date. Yeah, so David, one of the other things that the rep told me today from Lendingworks is that every investor is going to experience different results when it comes to how much of their money is actually being taken from them. That really royally sucks. But it's just the way it depends when you got in there. If you got in at the wrong time, you're going to take more of a hit than somebody that's been in there for 5 years. It's unfortunate. But that's just the way it is at the moment. Paul New said, he opened a trading 212 account. Very impressed in that I am actually up. Yeah, it depends what you invested in, Paul. What did you invest in? Yeah, I like trading 212. I like their interface. I think the pies are a little bit confusing, especially trying to withdraw stuff if you put it in an investment pie. You can watch my video on the channel about how to use it and what shares we actually bought for the £5,500 portfolio. But I like the interface. It's very, very good. Let's see. Richard says, what's your take on Propland? Looks good to me. Yeah, So, Rich, I've never invested through Propland, but I've been to meet with them, and I was impressed with the team over there. Um, yeah, I think that they know what they're doing. Again, it's a tricky time right now to know what's going to happen in the future, but they would be on my radar for sure. I think they've got a good product. Yep. So Propland, I would not two thumbs up, but a thumbs up. Sorry if I've been hitting the mute button by accident. I got this nifty little controller here that allows me to put up these comments and then take them off, put them up, take them off. So sometimes I hit the wrong button. Chica Boy has funds in Propland. There you go, Chica Boy. Nice. Norman's been with Proplands for a few years. It says good, very few loans to invest in. Richard says first security lot low, loan to V looks good. Secondary market also £1,000 minimum chunks. The auto vest could do to be lower, but to encourage more diversified loans. So I presume that is Propland. Yeah, I think what's on my radar right now is probably Blend Network. I just feel good about what they're doing. They have a really good influx of new loans even now, so I like them. Hi Tony, nice to see you. He says I'm not in, and no matter what they say going forward, would not touch it. Not sure which company you're talking about. Richard says unsecured loans are not the way forward. Lendingworks, Zopa, yeah. Time will tell. Time will tell. But yeah, I agree. I think defaults will increase. Mike says you can't flip on Crowdcube. No secondary market. Is that right? Yeah, I have a Cedars account, but I didn't know you couldn't flip on Crowdcube. That's interesting. But they are merging. So I'm wondering if that's going to change with Crowdcube. I know they're or trying to merge together, right? Or one is buying the other one out. It's interesting how Crowdcube doesn't have a secondary market. So then, having said that, then that is a big thumbs up for Mentos then through the investors, which I don't know. I don't really understand it, but there you go. Paul News says Zopa has lost money, never invested again, too many defaults. Dave Dawson, trading 212 seems a great way for someone to try investing small amounts. Yeah, one of the things I love about them is you can buy fractional shares. So, you want to buy 0.0001 of a Tesla share or Apple. You can build a nice diversified portfolio without having to dump too much money in. So I do like that. Norman says happy with crowd property at the moment. Slow to invest new money via auto invest. Yeah, it is tricky if you have a large account with them. When I was doing it, I seemed to only be able to get a 50 or £100 chunk in at a time. Dave says he likes Kuflink. They seem to be doing well. A lot of delayed loans, but that's not surprising. You're going to have that with every property lending company out there right now. David says my annualized negative interest rate at Lendingworks is currently at an 8% for November. Not happy with that, or the lack of communication about it. Yeah, so David, I will call them up and just talk to one of the reps and kind of get the lowdown clarification on how that's working. 8% seems really, really low. They're talking about -2% for the year, so 8% in a month. Sounds terrible. Paul says still getting interest from Kuflinks, no defaults. I did tell, by the way, I told the Kuflink rep this week to sort out the secondary market. I want to see some changes where you could actually not have to buy the whole piece of a loan. Say somebody puts up a loan of £1,000 out there, you can't buy £100 of it, but that's some serious coding that they would have to do. So I don't know if they're going to do it. John says Kuflink email offers 3% cash back for a £5,000 investment. Yeah, they're doing a Black Friday special right now. Tony says, I totally agree on premium bonds. Yeah. I never thought that I would be giving premium bonds a thumbs up for a 1% interest rate, but my mother's an older lady, so 85 years old. She doesn't need to be taking any risks with investments. So for her, that's relatively probably the safest place you could put it for her. Hi, Paul Bagworth. Nice to see you. Yes, definitely better late than never. You can always watch the replay for everything that we've chatted about. I had a lot of Lendingworks news chat this week about the negative interest rates. Paul News, done well on trading 212. Tesla is the best at the moment. Yeah, they just, after the stock split, I was surprised. It was really getting added to the S&P 500 too. I don't know if it's just a psychological thing, but that the stock just keeps on going from strength to strength. But again, I don't know if that will continue. Tesla's one of those strange companies because the car qualities are not very good yet. I see tons of them everywhere. I think it's a novelty factor, and I also see a lot of secondhand Teslas, so maybe people buy them, realize that the car is not as cracked up as it sold to be, and then they just end up selling them. So, but there's a lot of cars out there, a lot of Teslas, especially in the US. Yeah, that's exactly right, Dave. Tesla's reacting to the entry to the S&P. Might be a quick dip later on. Yeah, I don't know. I don't have the crystal ball that works. I have a crystal ball, but it doesn't work. Paul New, funding circle, rates keep dropping, lots of defaults. Yeah, they're focusing on their CBILS lending. I don't know what's going to happen with their peer-to-peer loans. Richard said, how many peer-to-peer companies are people invested in? I'm in 5 different ones, but could do with more. Easy Money. Yeah, I don't know about Easy Money. It's my favorite ones at the moment. Loanpad, Kuflink, Crowd Property, Unbolted, I think is worth a look. Assetz Capital is, it's kind of, I'm really curious to see what's going to happen with their SME loans, so I probably wouldn't put too much into Assetz at the moment, but they would be one of my preferred. Prop Lend, I think, is worth a look. Blend is worth a look. So there are some decent options out there still. Dave says he's in 7 different ones. Paul New says, thanks to the Fear Project for a virus with 99.87% survival rate. Yeah, this virus stuff is just crazy. And the vaccination, I don't know how effective that's going to be. They've never had a really effective flu vaccination, so I don't know if vaccines are the answer to this virus. John says, commercial property Anona residential to fall by 10% minimum in 2021. Yeah, I think you will see a drop-off in the values of residential over the next year. 10% sounds like a possibility. I haven't seen it so far, at least down in the Dorset area, but I know I have a friend who has a flat in London, has been on the market. I think it's 20,000 under value. She's been having a really hard time trying to sell it, so those London prices are going to, I think, continue to fall. Paul says, NHS Web says 329 people under 60 died since February of COVID. Not a deadly pandemic. Yeah, there's a lot of fear going on about it. But, the sad thing is, unfortunately, people over 60, 70, 80 years old, if they get it, it's touch and go for them. JP is in 8 peer-to-peer lending companies. Nice to see you on the stream, JP. Thanks for joining us. Yeah, Mike Powell said, I looked at property site. Seems to be a bit of a muddle as to what they were doing. Free, but annual management fee. Yeah, I'm going to look further into them as the months come on. I'll probably chat with the founders, see what they're up to, see if it's anything you'd want to consider investing in. Dave Dawson says, I've invested in one loan in Blend, but a bit of a pain, to be honest, and a minimum of £1,000. I prefer crowd property. Martin says, any comments about Mr. Trump? I'm amazed that 2 men in their 70s can maintain an election for over 2 weeks. I think I see what you were doing there with that. Maintain an election. He's a comedian. What do I think about Trump? God, part of me doesn't like the guy at all, and then part of me doesn't really like Biden at all, and I think maybe economically Trump might have been the way to go. But as a person, Trump is... the voters spoke, right? They said as a person they didn't want him anymore. They didn't care that their 401ks are... retirement ISAs and IRAs are just through the roof. They just care about his personal, what he's like as a person. I don't like him as a person. This video is probably going to get taken down. By the way, please hit that thumbs up. We got 27 thumbs ups. The video might get taken down. There's so much censorship going on YouTube now. If you start talking about COVID or President Trump and... So I may start putting the videos up on Rumble. If you haven't seen Rumble, it's a non-censored video platform. So I don't like censorship. Unless you're just spewing hate, like racist hate, you can take those people off. But people like, I heard Brian Rose is running for mayor in London. He's big on no censorship, the American guy, which is very interesting to me. I wonder if he'll be able to pull it off. And he's got a lot to say about the mayor of London. Mr. Khan has not been doing a very good job, according to Brian Rose. All the housing that was supposed to go up has not been put up. So he's an interesting follow on a London Reel if you don't know who he is, Brian Rose. Tony says, stock market does well when nowhere else to put money and plenty of government money laying about. Yeah. The thing about the stock market is what will make the stock market crumble is the damn hedge funds and the big Berkshire Hathaways. And, they collectively, if they decide to pull a plug, the stock market is going to suffer at some point. But again, investors like you and me really don't. You're right. We have Tina. There is no alternative. You could do some Bitcoin. You could do buy-to-lets if you got the money. But really aren't any alternatives. I'll be investing whether the markets go up or down. Peter says, property developments have been delayed due to COVID, which has doubtlessly increased the cost. Could that be why prices have gone up? Developers trying to recoup their losses? No, I think prices are just demand and supply. I mean, that's the basic premise of property is it's worth what somebody's willing to pay. It's like a stock. So if somebody's willing to pay it, then the prices go up, they pay it. If they're not willing to pay it, the prices drop. You're going to see it in London. The lack of demand is there. The property prices are falling. So I'm not sure that it has anything to do with that. I guess it would just depend on the margins that developers have. If they have high margins, they can afford to sell it for less. If they don't and they're struggling to make 10%, then yeah, maybe they have to put their prices up. But I think it's more just a demand and supply thing. Richard says, agrees on the diversified peer-to-peer is a reasonable safety measure, but not foolproof. If there's a liquidity crisis, which I think there is right now, 6 peer-to-peer at a minimum. Yeah, I think so. Mike Powell says, demand to move to the country. That couple who paid £400,000 for a £200,000 house. Yeah. Aki Chef says, Trump was on yesterday holding a meeting with a turkey. Yeah, he pardoned. It's so stupid. I mean, tradition, right? They pardon a turkey in the U.S. every year. I think Trump kind of looks a bit like a turkey. He's kind of a portly guy. Dave Dawson says, just be wary with investing in trading in 212. Currently, very easy to make money in a raising market. Not so easy if the market goes down. Yeah, it depends, David, what you're looking for. What are your long-term goals? I invest in stocks more long-term than short-term, except for what I'm doing in trading 212. But if I was using trading 212 just to buy for long terms, I'd probably be just buying Vanguard ETFs for the very long term. So I think you have to be wary investing in any stock trading platform. Just think of it as a long-term project if you are looking for long-term. If you need your money within 5 years, I wouldn't be trying to gamble with stocks, because the markets are frothy right now. 30,000 almost touching the Dow. Good possibility that when all of this economic stuff still continues to come through, the stock market does have another correction. We're up, like 12,000 of the Dow since March. It's crazy. Richard says, anyone in the European peer-to-peers, the rates are pretty high as long as diversified between 3 or 4 for low risk. I fear the safety net is a strong, obviously, currency risk too. Yeah, I'm not a fan of the Euro peer-to-peers. I think just being burned from Lendy, and the regulation over there is not very strong, I don't think. Even though regulations might not be the be-all and end-all, but it does give you some kind of coverage. But some of those peer-to-peer companies in Europe have already fallen prey to fraud. You're investing in companies in some Euro country aside of the UK. I don't know that I want to put too much money over there. Just be careful. Cedars have just launched a completely variable market. No restrictions on pricing. Wow. That's surprising. There are restrictions on when you can sell if they are raising or adverse info not eligible. Okay. Yeah, I don't dabble in Cedars. Mike, you're still waiting on that new platform. I know. I didn't bank on it being a holiday week this week and over here, and I'm so far behind. But next week, okay, I'm going to make you a guarantee. No, it won't be next week. December 4th, we have the Kuflink head honcho on here, so don't forget to be back here next Thursday. We got Narinda from Kuflink. So if you have questions, by the way, you can email me at help@financialthing.com or put them in the Facebook group. I'll start a thread there if you want. You have questions for Kuflink, I'll go ahead and ask them to Narinda next Thursday, 7:30 p.m. But the week after that, I promise, December the 11th, I will have the new platform that I've been looking at. So you can hold me to that. If I don't, I'll invest. I'll give £100 to charity. Okay, but I will. Maybe I'll still give the charity money anyways. Let's see what else. We're almost over an hour. Damn it! Always goes through. Paul, Brian and Woburn says, Paul, your stats on COVID are indeed correct. Richard McDougall, when do you think Octopus peer-to-peer will start lending again? I don't know. I don't know that they may not. They may not at all. They don't seem to be too keen on restarting, so we'll see. John says, end of stamp duty holiday equals lower demand for higher price residential. Yeah, absolutely. Totally agree with that. Yeah, the stamp duty holiday is definitely helping out, but obviously it doesn't help investors who buy buy-to-lets at all. So it doesn't qualify. Martin, you and your jokes, Martin. You were a real comedian tonight. Leave a window open. Can we invest in thieves and robbers? Yeah, you can. There's probably some companies out there that are thieves. Yeah. Brian said odds of winning £1 premium bonds numbers have changed from 25,500 to 1 to 35,500 to 1. New odds will be effective December 2020. Yep, so that means the rates will drop. But I'm hopeful for the £1 million jackpot. If I'm going to get 0.5% in interest, I want to do it on a premium bond because you got that opportunity that you might win more. But likely you are going to be... it feeds my little gambling thing that I have inside of me. Brian says, London looks like a wasteland. Eerie walking around once a great city. Cannes has been a disaster for London. Yeah. Paul says, anybody involved with Wealth Club? I don't know. I took a quick look at their website, Paul, but I think Dave maybe more. Dave Dawson might have knowledge about the types of investments that they offer more than I would. David Hall's views on Ripple. Ripple cryptocurrency. If you're talking about that, David. Not particularly. Yeah, my view on I tend to put Bitcoin, maybe Ethereum in the same group, right? And it's more due to branding than actually what those particular coins do. I don't tend to put too much cash into the other coins. I got a little bit here and there spread across, but I don't think Ripple in the long term is going to be the success that Bitcoin is. So, I mean, 95% of everything I invest in cryptocurrency just goes into Bitcoin. And again, it is a gamble, but I think there is going to be it's going to be big on Bitcoin. No guarantees, but I think in 5 to 10 years, you might very easily see $100,000 Bitcoins upwards to anywhere up to 10 million. Just my opinion. Debbie says, if you don't meet that 11th of December deadline, eat that shirt. Then I might die and somebody else would have to take over the stream. I don't know about that. And Steven says, play that CD. Steven, by the way, I cannot play the CD because weirdly enough, YouTube will copyright strike it and take the music out. So thanks to YouTube. Yeah, Paul, I understand what you're saying about the COVID stuff. It's just one of those things. But if anybody has any family members out there that have been affected, it's definitely a shame. And it's a horrible thing, but I think it's been greatly over feared by the media has really put a lot of fear into people, and I think the older generation should be afraid of it. Younger generation, it's a mess. I mean, it's just created such a mess, and I don't know that there's any answer. I don't know if vaccines are the answer. Probably not, because not everybody is going to want to get vaccinated. And the only way to get rid of a virus is to completely eliminate it, and that would mean having to have most, if not everybody, vaccinated. It's just not going to happen. And I think this virus is going to take different strains like the flu did. But I hope I'm wrong. Anyway, we're going to wrap it up. Again, please hit the thumbs up before you leave if you can. I hope you enjoyed the stream. We're an hour and 10 minutes in. I hope you enjoyed it. Have a safe and a happy week. Next week, Thursday, 7:30 p.m. UK time, we'll have Narinder, all being well. Narinder from CEO of Kuflink will be here. You can ask him every question that you've ever wanted to ask about Kuflink and anything else that you want. And yeah, we'll see you next week. And be safe, be happy, enjoy, live life, and love each other. Take care.